In this video, I'm going to prove to you with a DCF why Galaxy has 5x upside from here and why it's not too late to buy in even after their recent earnings crush. So Galaxy ticker GLXY has two segments it basically generates revenue from. Digital assets and data centers. And until recently, the company focused entirely on digital assets and Bitcoin mining, but it's now pivoted away from that Bitcoin mining to the focus on data centers. And one thing to add on their digital side that I really think is important is that they have a huge first mover advantage, almost a pure monopoly on equity tokenization. With Kraken, Ondo, Robinhood, whoever else is there, they all have tokenized versions of stocks that exist as synthetic or derivatives. Galaxy is undisputably the first in tokenizing real shares. And this is a huge deal. And even for institutional investors who have, policies restricting derivative exposure, Galaxy tokens have full economic and legal rights, including corporate actions, dividends, voting, and SEC compliance. So, if you read Galaxy's recent quarterly earnings, I'm sure you saw the absolutely explosive, insane growth in the digital assets. But it's interesting to take a look at the tangible addressable market and, see the potential Galaxy can scale to. Right now, the global crypto market is about $4 trillion in size. And you can see other categories here like gold at 29 trillion, global equities at 128 trillion, and real estate at 393 trillion. If all of this is tokenized, there's over $700 trillion in assets that could be digitalized. I mean, think about it. 24/7 trading, trade nights, you can trade weekends. Take it a step further to real estate. You don't need five lawyers and a consultant to exchange and draft up a legal agreement to exchange pieces of real estate. It can just all be tokenized and trade instantly with near perfect liquidity. I just wanted to share a pretty interesting graph here from treasuries.net showing that, Galaxy is a very trusted and large company. They rank number 7 globally in Bitcoin reserves alongside some huge names like MicroStrategy and Riot Platforms. So pivoting away here for a second from digital assets and to focus now on data centers, we talked about earlier how Galaxy switched their Bitcoin mining operation to data centers. They also received a $460 million investment from a private equity firm to help them build out Helios and really start adding extensions on top of it, which we'll talk about in the next slide. So here's Helios. It's a massive high performance computing AI data center campus in Texas. CoreWeave just exercised its option for the full 800 megawatts of power, which Galaxy says it will earn about $1 billion annually. However, the full Helios Center capacity is 3,500 megawatts, which represents closer to, in my DCF calculations, which we'll get to later, about $7 billion in annual revenue, which is pretty eye-popping because we're not even considering the digital assets revenue, and the market cap is at about 15 billion right now. They have 800 megawatts already leased out to CoreWeave with another 2.7 gigawatts in the pipeline. And the CEO expects approval from the Electric Reliability Council of Texas towards the end of this year for the extra part of the 2.7 gigawatts. And that meeting will actually begin on the 22nd tomorrow. So we could be hearing more news about this very soon. Now on to the earnings, the whole reason why we're here. Galaxy absolutely crushed it on the crypto side specifically. I mean, they've been building out the infrastructure over the past 8 years with relatively stable costs, but they're finally starting to add that scale and these high margin revenues at staggering pace here. Just to review, they beat the earnings per share by 261%, projected at 28 cents and hit $1.01. The revenue went from 15 billion to 29 billion, beating it by about 90%. So the earnings per share year over year up over 1,000%. Revenues up over 200% year over year. Earnings per share is up over 1,000% quarter over quarter, and revenues up 200% quarter over quarter. And the news is making its rounds, and analysts are starting to give some upgrade ratings here. We have one from Jefferies where we can see the price target was raised from $40 to $45 based off of the Q3 figures delivered today. So I kind of wanted to walk you guys through a quick DCF example, but first we need, two major points of data here. One is the breakout of the revenues and gains from digital assets, data centers, treasury, and a total. And that's going to let us know, obviously, how much of the proportion right now of revenues generated from data centers, which is barely nothing, and how much is actually generated from digital assets. So the second key piece of information and data we need to do our DCF in the next slide is the exact timing of when these megawatts are going to be delivered in phase 1, 2, and 3, the total amount, the capacity, and the potential mega capacity, and the annual recurring revenue associated with it. You can see here, phase 1 is 2026, they'll have 133 megawatts, 2027, 260 megawatts. 2028, 133 megawatts, and they'll eventually scale up to 526 with about 1 billion in recurring revenue. And my favorite part, the 90% plus EBITDA margins. All right, so here's the DCF, and just real quick to tell you the approach I'm going through in my mind is basically they generate revenue from two ways, right? Their data centers and their digital assets. The digital assets did not give clear guidance as to where they're going. They gave more, as we talked about, a tangible, addressable market and the real estate and the equities and that, but all we have to go off of is that basically it is a very quick growing business. And I think we can all agree that an extremely conservative assumption I'm going to make here is that it will only grow 12% a year. But you're going to be very happy because we all know it's going to grow faster than that. And that's going to make the price even higher. But just stick with me through my conservative assumptions here. Then we have some pretty, as outlined in the last slides, pretty hardcore, actual concrete timelines of when these data centers are going to be built out and at what megawattage. So first in my model here, you'll see is megawatts. That's basically the projected amount from phases 1, 2, and 3 through 2028. Then in the terminal period, I have 800 because that's the total capacity that they're expected without being granted this extension from the Texas Council can yield. So doing some industry research on the cost of these megawatts, I'm getting a range from $1.83 to trending all the way to 2.25 there in the terminal year. And again, I think these are cheap. I think there's going to be an electricity problem with supply in the future, and it's going to probably be a lot higher than that cost. But using those two inputs, we can start to gather the data center revenue. And we can see that, as they start to scale up, they're at about 243 million in 2026, and they'll be scaling up to 1.8 billion if they get those full 800 out. And this is without the 2.7 gigawatts that it can additionally bring in, which would quadruple this, okay, 800 to 2700. So triple, I guess. So now going to digital assets, like we said, alls I have is how much revenue they had and their profit margin, and I'm just going to grow it at 12%. I mean, they grew it like 1100% in 1 year. It's kind of hard to forecast where things are going here. So let's just be extremely conservative and say 12%. So now that gives this total revenue for 2026 of 115 billion and all the way up to 190 billion in the terminal period. So if we look at the profit margins from the last slide in the digital assets category, it's about 1% on each transaction they're taking, right? Not the high margin business, and hence why they're pivoting from the mining now to data centers because of those juicy 90% margins we saw in the last slide. But so that'll give us basically digital assets EBITDA of about a billion in 2026 and about 1.6 billion in the terminal period, and that's without accounting for this insane tokenization. So now going to data center EBITDA is where we start to see some more profitability. We're getting that 50% starting out, gradually increasing their EBITDA over time up until 90% their target from the last slide will land them at about 1.6 billion. So their total EBITDA is going to start out at 1 billion and end at about 3.2 billion in the terminal period. And that's with a conservative approach to the crypto and digital assets and a conservative approach that they're not going to get this 2.7 gigawatt extension on Helios. So now, right, we have to get to free cash flow. And the simplest way to do that is to just strip out what are the capital expenditures going to be. So they have to do a lot of building out of these data centers. So through research, obviously CapEx is going to be much more prevalent in the beginning because they have to do the building out of Helios and so forth. And it'll eventually teeter off over time. So I'm getting free cash flow at about 200 million in 2026, and it scales up to 3 billion in the terminal. So now if we apply a mid-year convention at 10%, that's 1 divided by 1 plus the discount rate in our scenario, 10%, raised to the time period minus a half period to account for the mid-year convention. We start getting the present value of our free cash flows, which turns out to be 39 billion. They have about 1.5 billion in cash that can be taken out, and they have 4 billion in debt that you need to take over if you were to buy the company, giving us an implied enterprise value of 42 billion. They have 174.8 million shares of the stock, giving us a target stock price on conservative digital asset approach and a conservative Helios approach with not getting that additional 2.7 gigawatts. We have a target share price of $241 and trading at 43. I mean, that's a 5x from here, assuming digital assets don't do much more than they're doing now, and Helios doesn't get the 2.7 gigawatt extension. I mean, this is a buy in my opportunity. All right, so that's it. That's all I had for you guys. Hopefully, you got something out of this. Let me know in the comments if you would buy, hold, or sell. I'm a buyer.